Here's another interesting one. TLT, long bond volatility. SPY, SPX, long index volatility. So check this out, guys. July 1st, 2021, the VIX options registered an entry in our database. If we compare the July 2021 to all other records, in this case, we have about 70 records. Data starts in 2017. That's 2016, I believe. But anyway, we see this value ranked as the 5th smallest value ever seen in the wiretapper in the term of put-call ratio. So some of you guys have asked us about put-call ratio. Here's an instance where I would actually use it, is paying attention to these very liquid indices, such as VIX. We can see that the very last entry that we have in our database for VIX and the volume tab came on July 1st. Prior to that, it was May 12th. And I'm not sure if any of you recall, but this week of May 12th brought some volatility with it. So here's another entry, July 1st. But here's the interesting part. One thing that we spotted was that the ratio seemed very low. It's 0.24. Effectively, what this is telling us is that for every 100 puts, only 24 calls are being purchased. And this is quite an extreme read. Remember, the VIX, if somebody's purchasing call options on the VIX, that means that they think the market's going to go down. They're hedging. However, if people are buying puts on the VIX, what that is implying there is that they believe that VIX needs to come down some more. And it's already at relatively low levels. So how, compared to every other entry we have in our database for VIX, which there's a total here of 82 results. If we sort by this column, remove the sort here, remove the sort here, and just sort on this column, what are the lowest values? Put the put call ratio, puts over calls. A low value, right? Or did I get that twist? Sorry, I apologize. You're absolutely right, Kevin. I misspoke there. Good catch. So going back to my point. But yeah, you're absolutely right. When this value is high, when it's above 1, that means that there's more puts than calls being purchased. When it's low, that means that there's a whole lot more calls being purchased than puts. Thank you, Kevin. So if we look at these dates, right, the very lowest put call ratio that we have registered here came at a time when VIX was in single digit land. It was trading at $9, and boy, do I remember this time. This was January 8th, leading up to February 5th, where the VIX had a pretty large increase, and several VIX ETNs blew up because of it, and it was quite a scene. Here it is, February 5th, and as you can see on this date, on this exact date, look at the range. The change in VIX was 20, just on that date. That's insane. But what made February 5th interesting was that there were so many things screaming out, hey, a market sell is about to happen. Hey, a market sell is about to happen before February 5th occurred. One of them being, the put call ratio on VIX being this extreme low on January, January, prior to that occurring. The interest rates were moving in a certain way. There's a whole bunch of things. So if we go and try to find the value from July 1st, we notice that it's up here. It's not it's not the first one, but a read of 24 is also not a good one. It's right there as far as ranking goes. And as you saw, there's plenty of entries in the database. So at least I put some significance on that. Then as mentioned, February 5th, there's a giant sell-off in the market. In May 2020 or March 2020. Another interesting artifact. Here's another strange thing. So on this date, on the 1st of July, price closed down, but IV went up. If we go back and we zoom in to that July 1st read, IV change 1, but change in price down. That's sort of an anti-pattern in VIX. Can we chart the put call ratio and toss? You can, but not for all stocks. There are some symbols that you can use to chart put call ratio. They all start with a $sign. So you can search for them. Okay, so back to the trade idea here. So we have this thing going on with VIX. And so taking the signal from the wiretapper, along with several other broad-based market metrics that we look at with our edge tools, consider covering long exposure and adding to positions that would gain from a sudden and sharp revaluation in markets. One way to do that is to consider TLT or ZB options. Consider a strangle, betting on higher vol and sharp movements. Likewise, sort of like a pair, consider purchasing SPY or SPX puts to hedge or speculate on a down move in equities and indices. A down move in equities and a spike in VIX. So why TLT? Why bonds? If you've been paying attention to bonds lately, you'll notice that they've been moving. They're starting to become volatile from a period of time where they were pretty calm. So if we look at, in this case, TLT, but we could use ZB instead if we wanted to. Either one works. And what do we see? Okay, the price falling. These implied vol bands. I mean, they haven't really been expanding. If we go back to the pandemic, we can see what is possible as far as volatility goes in bonds. Right? These bands can get very wide, meaning options on TLT could gain a lot, or on ZB. And currently, price is hitting and tagging up against this upper implied range. But remember what I mentioned. One second, let me get rid of these drawings. So remember what I mentioned. When price breaks outside of these bands, expect for price action to be volatile, to be violent. If it gets outside. In this case, we see that there's some rejection, but I don't know. I see an uptrend. I see an uptrend in bonds, meaning lower yields. And if we look at, for example, our bond edge tool, I'm pulling it up. One moment. Bonds. So last week, for example, was a perfect week to be long some ZB or TLT options. And why was it a great week? Because what we can see here is price action on ZB, TLT moved well outside of what was expected by the market. So had you purchased some options in ZB, and in this case call options, you would have been able to get a pretty decent gain. And the theory here is once vol gets going on bonds, I mean it can have some wild explosions. So let's do 10-year and make this into a quarterly, for example. Alex, that's a great question. Doesn't it prove that it makes money? Yeah, you're absolutely right. An option seller, a seller of options, will make money most of the time. It depends on what the underlying is. But what that tells you clearly is yes, absolutely. However, when you're playing a game where you have unlimited risk, but your gains are capped, the chance, if there's a chance of total wipeout, even if you win 80% of them, if there's a chance of complete wipeout, the strategy sucks. So although what you're saying is accurate, and again, more so for some names than others, I think it's best used. I've tried using it for that purpose, but where I find it more useful is to show me via allowing me to visualize vol, is to show me when it is more likely than not that price will break outside of these bands, and thus the option seller loses and I win, the option buyer being me, that is. So Alex, great question. For TLT, it closes in 75% of the time. So over the past 5 years. So in TLT over the past 5 years, on average, what's the average? On average, you make $2.31 per month, and on average, you lose 68 cents. Biggest winner, biggest loser. But then what if one of these happens, right? Like you're done unless you're protected. The previous screen, this screen, is that what you mean, Francis? These are bonds, and I'm looking at more time. And what I wanted to show you is once the implied volatility in bonds starts to move, it tends to stay moving in that direction for quite some time. Not quite some time, like not like a year or whatever, but you know, this was 30 calendar days, for example. When vol began moving during the pandemic, let's see, that was 32 calendar days. When vol began moving sometime around here, that was 23 calendar days. So I am seeing vol begin to move up. We can see that here. We could also see that here. What was the starting vol? 16. Currently it's compared to what it started with, 16, 15 right now. No, but it was higher on TLT. Let's look at ZV. By the way, you could also use this with futures, and futures have options. So if you could see what the difference would be. However, the futures have different expiration dates than the equities do. So in order to deal with that, the tool has built into it a mechanism for you to change when the expirations are. Right now it's set up for the third Friday of every month. This 3 here means the third, and then this 5 means Friday, because Friday is the 5th day of the week. So if we're looking at ZB and we knew that ZB expired the 4th Tuesday or the 4th Wednesday, or I can't recall exactly what it is, this is how we change it. This is how we're able to adjust the tool if we want to adapt it to using, let's say, I don't know, options on something that does not have every Friday, third Friday of every month expiration. So that's how you would adjust that. It's very useful for looking at crude oil. Crude oil has very liquid options as well, but crude oil has different expirations. If we look at CL has one, yeah. So look at how these are misaligned by literally just 1 day. So the options on CL expire in 3 days. That's on a Thursday, right? That's going to end up being on a Thursday. And if we look at a calendar, what we see is that they would end up expiring on the 15th of July, which is the 3rd Thursday of every month. So if I wanted to adapt the tool for CL options, I need to look at the 3rd Thursday. Why Thursday? 4 is a Thursday, 5 is a Friday, 4 is a Thursday, 3 is a Wednesday, 2 is a Tuesday, 1 is a Monday, and then the third Friday. If it had to be the 4th, Tuesday, then I would change this to a 4, so on and so forth. There's also weeklies. I have them disabled currently. We're only looking at monthlies, but for products that have weekly options, this also plots them. And now, we after making this change for CL, now we're looking at it properly. Now we can see exactly when the last options expired, and we can see that these options that are currently in cycle, they'll expire in 3 days on the 15th. We could also see that the starting vol was 62 and the current vol is 39. And that's why these are so much wider than the month prior. So check that out, TLT and ZB versus SPY or SPX, depending on your size. TLT is popping up in the wiretapper,